Do you think that living in the DC area means that you are safe from natural disasters? There's no hurricanes, there's no earthquakes, there's no floods, there's no tornadoes, there's no wildfires. What could possibly go wrong? True, but the insurance industry would like a word. Even in our seemingly safe corner of the country, getting homeowners insurance has become surprisingly expensive. Claims across the US are skyrocketing, and clients of mine recently found out how a house could be flagged even if you've never filed a property claim in your life. So how are you going to protect yourself? How are you going to protect your home? And how are you going to protect your wallet? Let's talk about that today. Stick around because the number one mistake that I see buyers make, we're going to talk about at the end, and fixing it isn't always possible after the fact. I am Melissa Terzis, DC Real Estate Mama. I do all things real estate in DC, Maryland, and Virginia. So if you are potentially moving here or living here, interested in all that, you can subscribe. And now we're going to talk about insurance. Guys, it used to be that when you needed homeowners insurance, or really any insurance, you picked up the phone, you called a few companies, and you went with whoever gave you the cheapest bid. Now, it's not that easy. All these natural disasters, plus things like the Surfside Condo Collapse in Miami, have rewritten how the insurance industry functions. And those things that change how it functions keep getting rewritten day after day after day. Let's start off by saying who needs homeowners insurance, all right? Well, if you own a home, you need homeowners insurance. If you have a mortgage, you are required to carry insurance coverage protecting that home. Even if you don't have a mortgage, you still want to have homeowners insurance. With houses, insurance policies will cover the structure as well as the contents. So something happens, the house burns down, the policy kicks in to replace the things that were inside the house and also replace your house to what it was. Now, in condos, your policy will just cover the contents of the home, basically your stuff. The condo association will maintain a master policy to cover the building should it sustain damage. You're also paying for that, but you're paying through it like secondhand via your condo fees. So you're paying the management company, and then the management company has an insurance policy. So DC area sales contracts used to stipulate that insurance needed to be in place 7 days before closing. Several years ago, though, our contracts changed, and they now require the buyer to secure homeowners insurance within 7 days after contract ratification. So contract ratification, that's our term for the contract acceptance here. When all parties sign and agree, and then it's delivered back, that's your ratification date. And then you go from there. So why the change? Well, the number of claims filed and paid out over the past few years have risen astronomically, and buyers were finding out too late that some homes were uninsurable. All right, next question you might want to ask. Why are some homes uninsurable? If we don't live in a high-risk area, Melissa, how does a house become uninsurable? Well, rates can spike based on a number of things. Zip code, higher claims in the area, and past owner claims. Foreshadowing. You're going to hear about that again in a hot second. So what are the insurance hot buttons? Well, the most popular reason that insurance companies balk at insuring a home is the age of the roof. It's not only older roofs that can cause you an insurance headache, though. Outdated electrical panels are another item. Proximity to water, even tiny streams, or having a historic property with costly replacement values are all other things that you have to be aware of that might crank your policy up. So here's the story. My clients, they found out the hard way. I have clients who are currently under contract to buy a home. This is actually their second rodeo with this home. It's the second accepted offer on the same house. They walked away the first time. On their first offer, the home actually had multiple offers. So as part of the negotiating strategy, my clients opted to put in that they were going to do a home inspection, but it was what we call like a void only, which means you're not going to negotiate for any repairs. You're not going to ask the seller to fix anything. You're just going to essentially void if there's something that you don't like. We knew that the home needed a new roof. We were prepared for that. When we walked up and looked at it, you could see, there was some little bit of, inconsistency in the level of the roof. And that usually just means that that's like it's coming to the end of its useful life. So the problem, though, was that the inspection confirmed that the age of the roof was 24 years, definitely well past its serviceable life, but this actually wasn't the reason they voided the first offer. Inspection also revealed that there were heat and air vents that were not present in every room of the house, to include 2 of the bedrooms. 2 bedrooms were served their heat and air conditioning via a vent in the hallway bath. The seller said that they never noticed this because we asked. We said, wait a minute, like on the property disclosures, there's a specific question that says, does the seller have any knowledge that heat or air conditioning is not supplied to all rooms in the house? And they checked, no, we've got no knowledge. But they were sleeping in a bedroom, as was their child, for 4.5 years where there was no heat vent in there. Anyway, it seems strange to me that they allegedly never noticed this, because when we did the home inspection, it was like, March, but it was still cold enough out that the heat was running, and it was legit like a sauna in the bathroom. Yet the bedrooms were noticeably cooler. The sellers didn't want to add vents when we brought this up, and my clients decided to just void the offer because they couldn't get a bid quick enough, and they didn't know if they were looking at something like $500 or $5,000. So after a few weeks, this home actually remained on the market. My clients wanted to just revisit the idea of writing another offer. I found out from the listing agent that the vents were installed properly, so my clients reinstated their prior offer. Anyway, if I thought that a home without vents was the strangest thing that was going to happen with this house, I was wrong. While my clients were going through the underwriting process with their loan, they attempted to go ahead and secure the homeowner's insurance policy as required by the lender and also the contract. And as I always recommend, they started with their auto insurance company first. So due to the age of the roof, their current company imposed a temporary exclusion. They were not impressed with that roof at all. But they said they would cover the house, but the coverage wouldn't kick in until the roof was replaced. So the buyers didn't love the idea of not having coverage on their newly purchased home for the first 2 or 3 weeks of ownership. I actually had hoped that they might be able to go back to the insurance company and get a policy with some sort of rider to explain that the roof coverage or anything pertaining to roof issues just wouldn't begin until proof of replacement was provided, but that anything else in the house would be covered. This wasn't an option. The insurance company said, no, no, and no, we're not covering anything in that house. So my clients asked me about replacing the roof prior to closing, and this is something I, for obvious reasons, just don't recommend. What if the sale doesn't go through? I mean, you just gifted these people a new roof, and there's just, you can't even file a contractor's lien because you're not a contractor. So I don't even know how you'd get your money back. So my clients decided to check with some other companies. And then in comes the Clue Report roller coaster ride. Clue, C-L-U-E. This is where the story gets crazy. One company said that they would insure them, but as I'm sure you guessed, it was for twice the normal price. When another company pulled the Clue Report, which we call the Comprehensive Loss Underwriting Exchange, it's like a credit report, except that it outlines the claims made on a property. Hold on to your hats, people. The Clue Report for this property had 5 separate claims made by the sellers on this home in the past 4 years. I about fell out of my chair. We got a copy of the report. The first 2 claims the homeowners made very early in their ownership period. One was for $2,000 and the other one was for $31,000. There was very little info on the report as to what these claims were regarding. But then the 3 subsequent claims after that, so claim number 3, 4, and 5, if we're looking chronologically from the time they bought the house.
You are denied, denied, denied.
Remember the missing vents? The sellers actually called their homeowner's insurance company about them. That claim denied. All right, so these sellers, they're ridiculous. Your homeowner's insurance policy is there in the event of when you need it, of an emergency, but it is not an ATM machine. I have owned property for over 25 years. Do you know how many times I've called my homeowner's insurance companies in various states here too?
0.0.
I want them to help me when I really need it, not when our dishwasher floods or explodes or whatever. Mop that water up, call a plumber, maybe buy a new dishwasher, but don't call the insurance company. So ultimately, my clients went with the policy with the 100% markup. They will revisit it once the roof is replaced and see if they can't get an adjustment on that premium. All right, so homeowners insurance impacts sellers as well. Here's another client story, but this time it's actually seller clients of mine. They have moved out of their property. They planned to do a full renovation prior to selling to capitalize on their investment. Their current insurance company went by the property, saw that the ground floor windows had iron bars on them. This is very common in the city. And they said they won't insure them any longer. the policy was dropped. My sellers have been trying to obtain insurance, but nobody will touch this. The property is being renovated and the sellers don't live there. There's just too much liability in that equation for an insurer to take on. So this is a situation where she had the insurance and then they got dropped. And now trying to get insurance when she's in a different situation. She's no longer living in the house. It's going through a renovation. Like the contractors are in and out of there. There's too much liability for an insurance company to take on, so she can't get insurance. Fortunately, they own the property outright with no mortgage. Unfortunately, they have no insurance, so we're kind of racing against time to get this property renovated and sold, but we all kind of know that this is a huge issue for the seller from a liability standpoint. If they did have a mortgage, they would actually probably find themselves in this position of having to pay what they call the insurer of last resort, which is essentially a policy that the mortgage company finds for you and then buys for you, and you get to pay the exorbitant price for it. Just happened to me on our condo in Florida. Apparently the master policy insurance for the condo has some sort of gap in wind coverage while the roof's being replaced on the condo community. And they just assigned some insurance policy. I don't even know, whatever it is. It'll be over soon, hopefully. All right, now, next thing, renters policies. There are two important things that you have to know if you haven't owned a home yet. Just don't think that none of this applies to you, because it does. When you rent a home or a condo, the landlord is likely going to require that you maintain property insurance. This is only a policy, though, to cover the contents of your home, i.e., again, your stuff. If there's a flood, if there's damage to the home, of course the owner has to handle that and fix the property because they are the owner of it. But if your personal items are damaged too, the landlord's actually not responsible for replacing your things. And so this is where that renter's policy comes in. Two things you need to know, as I said. First, renters policies are an excellent value. They are typically very inexpensive. They usually cost a few $100s a year, and the payouts can actually be kind of unreal. If you rent a home and you were displaced for some reason, let's say there was a flood or a gas leak, or I know a condo building in DC where friends lived where the elevator basically had an electrical fire, and then everybody had to move out of the building, you might still be required to pay rent, but you would not have a place to live. This is where your rental policy is going to kick in. It's actually going to provide you a place to stay, and the per diem is usually much higher than you need. So a lot of times people report that they had a rent around $2,500 or $3,000 a month, but then their insurance company was giving them close to $5,000, twice what they were paying in rent, to replace their personal items and pay for temporary housing. You can go basically from a one-bedroom basement apartment here with mice to the Ritz or the Four Seasons with that insurance policy. Now, I know that sounds exciting, but wait for the second thing you need to know. If you do file a claim on a renter's policy, it can and will follow you down the road. Remember the school permanent record? It's going to be on your permanent record. Hello, Clue Report. It may make it harder to get insurance when you do become a homeowner, or it could just cost you a whole lot more. Like any insurance, you only want to use this when it is an absolute necessity. So what is the big mistake that buyers make? Guys, do not just pick up the phone and call any old insurance company. I concede, I love the Gecko, their commercials are amazing, and I've been with them for 25 years, but I will tell you that a great insurance broker is as important as a great realtor, a great lender, a great inspector. You cannot shortcut this. You have to find somebody local, familiar with the market area, who can help you. We have a local contact here in DC who we refer everybody to, just as a matter of once you're under contract, if you want to check your insurance and everything like that, here's what you should do. We refer everybody to somebody, Brian. We do not get kickbacks, so please don't think oh, she's referring her friend. I actually don't even really know Brian. I just know that he's been able to save so many of my clients a ton of money. You will want to provide all of your insurance needs and your current policies, because this is actually how you get a great bundle discount. Make sure to review your coverage annually, also because your needs may change based on life changes. So that's insurance, and that's what's going on right now with property insurance and things that are happening in this market. If you have any questions about anything real estate, my contact info is coming next.